Hey everyone, and welcome. Today we're going to dive into one of the most fundamental tools in all of accounting, the cash book. Seriously, whether you're studying for an exam or you're thinking about starting your own business one day, getting this down is an absolute game changer.
So to make this all make sense, let's put it in a real-world context. Just imagine for a second. You did it. You opened your dream coffee and bookshop. The espresso machine is humming, people are browsing the shelves, and money is finally coming in. It's amazing. But it can also get chaotic fast. And that's the million-dollar question, isn't it? How do you keep tabs on all of that? Because the answer to that question is the key to knowing if your business is actually healthy. And you guessed it, that answer is the cash book. Okay, let's get right into it. First things first, what in the world is a cash book, and what makes it so important? The easiest way to think about it is as the official financial diary for your business. Every single time cash moves, and that means physical cash or money in your bank account, it gets written down here first. This is ground zero for your cash flow. Now, here's what makes the cash book so cool and, frankly, so powerful. It has this unique dual identity. It acts as a subsidiary book, which is just a fancy way of saying it's the first place you record transactions, but it's also a principal book, meaning it's considered part of the main ledger itself. This is incredibly efficient. It means you don't have to do the work twice by keeping a separate cash account somewhere else. It's a huge time saver. You know, like any good diary, the cash book has two sides to every story, the money that comes in and the money that goes out. So let's break down that structure. Take a look here. It's actually really simple. The left side is the debit side. That's for all your receipts, all the money coming in. The right side is the credit side. That's for all your payments, all the money going out, in and out, left and right. And this brings us to the golden rule. Honestly, if you remember just one thing from this whole explainer, make it this. Debit what comes in, credit what goes out. Burn that into your brain. It will be your North Star for every single entry you ever have to make. All right, now that we have the golden rule, let's look at how we actually build one of these things, from the super simple version to the one most businesses use. So you'll see a few different flavors of cash book out there. The single column is the most basic, just cash. The double column adds a spot for discounts. But really, the one we're going to focus on, the one you'll see most often, is the triple column cash book. Why? Because it tracks everything you need: cash, bank transactions, and discounts. It gives you the whole picture. And here it is, the blueprint. You can see our two sides: receipts on the left, payments on the right. We've got columns for the date and the particulars, the details. That LF column stands for ledger folio. It's basically a reference number. And then the three big ones on each side: discount, cash, and bank. This is our command center for tracking all our money.
Okay, let's dive into a concept that, I gotta say, trips up a lot of students at first. But trust me, once you get the logic, it's actually really simple. We're talking about the contra entry.
A contra entry is what happens when you're just moving money between your own pockets. That's it. Think about it. You take cash out of the register and go deposit it at the bank. Or you do the opposite. You withdraw cash from the bank to put in your cash drawer. No money actually left the business, right? You just shuffled it from one spot to another. That's a contra entry. So how do you record it? It's a super clear step-by-step process. First, you see that the transaction is just between your cash and your bank. Second, you make an entry on both the debit and the credit sides of the cash book. And third, and this is the absolute key, you mark both of those entries with the letter C in that LF column. That C is a signal that says, hey, this transaction is done, it's complete, no need to post it anywhere else. Let's look at a quick example. We deposited $500 of cash into our bank account. Okay, so on the debit side, the comes in side, our bank account received money, so we put 500 in the bank column. On the credit side, the goes outside, our physical cash has left our hand, so we put 500 in the cash column. See that? Both sides get an entry, and both are marked with a C. It perfectly balances itself. All right, so you've been making entries all month. At the end of the period, it's time to close up our diary, draw a line, and figure out exactly where we stand. This whole process is called balancing. Now, balancing is very methodical. You just have to follow the steps. First, add up the debit and credit columns for cash and bank. Then, find the difference between the two totals for each. That difference is your closing balance. You write that number on whichever side had the smaller total, and you label it balance C/D, which just means carried down. Then, when you bring that balance over to start the next month, you call it balance B/D for brought down.
And here is a major exam tip. I see this mistake all the time. Students try to balance the discount columns. You never balance the discount columns. You just total them up. That's it. The discount allowed and discount received are two totally separate things. You just add them up at the end of the month and post the totals. Don't try to find a difference between them. Okay, this is the perfect time to put this into action. I really want you to pause here, maybe grab a pen and paper, and try to balance a sample cash book yourself. Actually doing it is the absolute best way to make sure these steps stick in your head. All right, welcome back. Hopefully you gave that a try. To finish things off, let's do a quick knowledge check with a couple of questions. You ready?
Question 1. A cash book with cash, bank, and discount columns is called a what? If you said C, triple column cash book, you are absolutely right. And question 2, what letter do we use to mark a contra entry in the LF column? Think back to that special entry we talked about. The answer is, of course, C. Great work.
So let's just do a super quick recap of the most important points. Remember, the cash book is special because it's both a journal and a ledger. Our golden rule is debit what comes in, credit what goes out. Contra entries are those internal transfers marked with a C. And finally, balancing is how we wrap up one period and start the next.
You know, you've now got the fundamental skill to actually read and write the financial story of any business. And that's what this is. It's not just about numbers on a page. It's about a story of what's working, what's not, and where the opportunities are. The next step is learning how to interpret what that story is telling you.